So this strategy involves setting up the 21 EMA. This is 21 EMA. This red line is the 21 EMA. And then the 200 EMA is your perspective. 200 SMA is your perspective. If price is above 200 SMA, you can look to buy. If price is below 200 SMA, look for sell. Now, if this 21 EMA, all right, if it moves like a sloping downwards movement for sell, wait for 3 free candles. 1, 2, 3. This is the third free candle. This is your entry. The high is your stop loss, and distance from your entry to stop loss, same distance your TP. All right, for short, for you to go short, for you to sell, but that must be in confluence with this indicator with the one showing sell. That is to say, it's telling you that you should look for sell, in the sense that this red line must have crossed down for you to wait for 3 free candles. This red line must have crossed down on the blue and the black line for you to wait for 3 red candles below, while the same red line must have crossed up for you to look for 3 candles above. 1, 2, but there is no third candle above, and this has not crossed here for you to look for above here. So well, you can look for above after this has crossed. All right. So the third indicator, the second indicator window, which is indicator window 2, is the bear power indicator. Now for the bear power indicator, if you are selling, the bars must be under, must develop under, to confirm that you can go ahead to sell. Like you have your signal to sell around here. At that point, you want to sell. You want to place a sell entry here. This must be under, this must be under for bear's power. Also, bull's power must be under, like you can see, under. Now, when the bear's power and bull's power bars are under, they must be in a uniform order, slanting downwards. The two must be under and they must be slanting downwards. Must be diverging downwards, not converging inwards. When you see them converge inwards, like you have in this particular example, converging inwards, when they both converge inwards, look for buy. All right. When you're looking for sell, you must make sure they converge downwards. Now, the checklist is when 3 candles form sell, the last candle form is the last candle below the 200 SMA. If yes, checklist 1, okay. Now the 3 candles that formed away from the 21 EMA, checklist 2, are they, extending downwards and not retracting? Hope you do not have a hammer as the last candle. If that is checklist, then you have 2 checklists ready. Then the third one is indicator window 1, is the red line crossed below the 2 black and blue lines. If it's yes, checklist. And 3 are the bars forming below the bear's power in a diverging manner, not a converging manner. If that checklist is okay, that's checklist 4. And the last checklist is the bull's power, the bars forming below It's also in a diverging manner, not converging manner. If those checklists are ready, then you can enter your trade. Let's look at it again. The first checklist is to sell 21 EMA once, 3 pointing downwards, 2 price, 3 below 200 SMA, 3 bearish candles from 3 from 21 EMA. Okay, and pointing of closing downwards, not retracting, not having hammer, no hammer as last candle. Okay, checklist 4. Red line on indicator in the one cross down on other lines. But yes, power bar diverging downwards, not converging, not converging upwards. The power bar is forming below zero line, forming below zero level and diverging downwards. 5 and then 6. 6 bull power, bulls power, bulls power bars forming below zero level and diverging down, not converging upward. So in as long as 21 EM is slanting, you can know that by just drawing a trend line against it like this, and you confirm it's slanting, you are good to go. All right, and checklist